US President Donald Trump announced a 90-day pause on many new tariffs but raised tariffs on imports from China to 125%, up from 104%. This reversal came just a day after new tariffs were imposed on goods from multiple US trading partners, causing market turmoil and raising recession fears. At the same time, Trump authorized a 90-day pause with lower tariffs on other countries, reducing them to 10%, which raised uncertainty about its impact on the European Union, which had already announced countermeasures. Pause led to a rally in US stock markets. Though China and the EU had already imposed new trade barriers on US goods in retaliation, the EU imposed 25% tariffs on US imports like motorcycles and poultry, while Canada also began countermeasures. The global trade war caused widespread market losses, including a drop in US stock prices and a weakening yuan as China retaliated with higher tariffs. Beijing pledged to defend its interests, and experts warned of long-term economic consequences for both the US and China. In response to US tariffs, China blacklisted US AI companies and raised tariffs on US goods from 34% to 84%. Meanwhile, Trump urged companies to relocate to the US with promises of no tariffs and fewer delays in setting up operations. The trade conflict has led to fears of a global economic slowdown, with analysts divided on the outcome. Some believe China's economy may be more vulnerable, while others think the conflict could make China more self-reliant. US stock markets have seen their biggest losses since the 1950s, with the S&P 500 nearing a bear market. European and Asian markets also saw significant declines, while US treasuries suffered large losses as investors sought safer assets. Trump's trade policies remain divisive, with some economists predicting a long-term restructuring of the global trade system, with others warn of escalating tensions.